consider the regulatory reports. We are on item number 6 on the agenda for consideration of the regulatory matters. And the report that we are going to take now is the review of the methodology to approve maximum prices of gas in South Africa. Please take the matter as read and do anticipate issues that were previously raised by the members so that you deal with them in your introduction so that we can save time. Thank you. Ms. Makota, over to you.
Thank you, Chairperson. Chairperson, we have been undertaking a process to review the methodology to approve maximum price of gas. And this was necessitated by, number one, changes or developments in the industry internationally and locally, such as the tightening of gas price, which had an impact on the local gas prices. And secondly, there were unintended consequences that were observed, which also had negative impact on the local gas prices. And in addition, NERSA conducted a rationality test, and the results of that rationality test was that the maximum price that are yielded by the methodology were irrational, and therefore NERSA had to start the process of reviewing the process. And that process started in April this year, 2022. NERSA first published the discussion document, the first discussion document, and that discussion document had various options that NERSA was considering. And then we received comments, stakeholder comments, and a public hearing was also held. And that therefore resulted in NERSA revising its first discussion document. We then published the second discussion document. And the second discussion document was informed by stakeholder inputs and further analysis that NERSA had done. And this second discussion document focused on the particular methodology which was then preferred, which was the cost plus methodology. Now, in this submission today, Chairperson, we are recommending that NERSA adopts the cost plus methodology to be used by the importers of gas from regional markets and also by third-party traders as a methodology for implementing or applying for the maximum price of gas. The main reason why we are proposing this methodology is that, number one, it does achieve the objectives of the Gas Act, in that we believe that it facilitates growth in the industry. It promotes gas as an efficient and affordable gas energy source. It also makes sure that it attracts investment. The prices that are yielded there, they are more stable, and therefore they take care of the volatility that NERSA observed in the previous years, starting from the first quarter of 2021. And lastly, Chair, we believe that given the mandate that NERSA has as provided for in the Gas Act and the pipe gas regulations, the cost plus methodology enables NERSA to deliver on its mandate. And therefore, Chairperson, we have also done a checklist to ensure that all the requirements of the Gas Act are provided for as per this methodology. We've also considered the previous rulings that were done on the methodology. And therefore, we believe that this cost plus methodology that we are proposing, it does tick all the boxes in terms of the court rulings guidance that were provided there. And also when we look at the regulations and the Gas Act. Chairperson, we also received inputs from stakeholders. I will just summarize the inputs that we received from stakeholders, the main points on the stakeholder inputs. The main points, number one, was relating to the implementation of the cost plus methodology. Stakeholders, what they have said is that NERSA, in determining the acquisition cost of gas, we must make sure that there is evidence in the form of supply contracts, evidence on the cost of gas and all the costs that are incurred. as a base for coming up with the cost of gas acquisition and also the trading cost. And they have also provided inputs that in doing this, we must also make sure that there is no duplication of cost. So we have taken that into consideration. And some of the stakeholders, they've indicated to NERSA that we must make sure that our cost plus methodology complies with the pipe gas regulations, particularly looking at regulations 4.3 and regulation 4.4. So in our RFD, we have provided a thorough explanation on how this complies with the pipe gas regulation. The second main issue that was raised by the stakeholders was relating to the methodology for third-party traders, in that the methodology that we come up with, it must enable third parties to compete in the market. We have taken that into consideration, and we have included that as part of the methodology. The other issue that stakeholders have raised was relating to the reopener, to make sure that in cases perhaps where there is volatility in the gas market, or where the supply cost varies often, NERSA must make provision of that. We have certainly taken that into consideration. And of course, the last issue was relating to the adjustment, the fact that we must make sure that there is stability in the way that we do the adjustment of the maximum price of gas. Chair, we are requesting the committee to approve the recommendation that are provided on the submission. Thank you, Chairperson.
Thank you very much, Ms. Makota, for the comprehensive introduction covering all the main points, just to show the process that was undertaken and all of the key issues that were considered. Members, I would like to open up the submission for discussion, for comment, for input from you members. If any input and suggestions members have, you may indicate by show of hands, members. Any input, members? Mr. Mkiza?
Thank you, Chairperson. Just to note that this subject has been workshopped also to deal with some of the issues that were raised around the proxy companies selected. I would just like to understand from the team if there are any adjustments that are going to be done, whether this earnings before interest, tax, depreciation, and amortization, they're just going to be taken as they are, or there's going to be some kind of adjustment for some anomalies in case they exist. For example, one looks at a black swan event like COVID-19 as having had an impact in terms of distorting some of the figures that you could be getting. Just like to get that a comment from them in that regard. And I think that we should have a heading that deals with the issue of just the robustness, which I think that will also be part and parcel of looking at the robustness, so that you are able to cater for anomalies, changes in rand, dollar exchange rates, etc. Things that could kind of jeopardy the whole methodology, or create I would say abnormalities, and therefore just to be clear as to how that would be dealt with. That also will talk to the issue of dealing with possibilities of duplication. And then on if they can just help me to explain in terms of the price adjustment and the frequency of the price review, where they talk of 12 months, because sometimes I get lost in terms of understanding how this would work. I'll make an example of the petrol pricing, the fuel pricing, where the price stays fixed, but you keep tracking the under and over recoveries, which you then will be able to include. So the period of the review of the methodology is not the same as the period of the review of the price. You review the price whilst the methodology stays the same, and you adjust accordingly. That adjustment can move to monthly, or it can be done, it can be ongoing on a daily basis, but you reconcile them, and then at the end of the month you change. Or you can change in 6 months, but the frequency of change helps in terms of dealing with the lag. So in electricity, you will have the clearing account, the RCA, to compensate for that, but doing it after a year. So I'm saying that I just like to get clarification around that, because we need to have stability in terms of the regulatory framework. At the same time, we need to improve with it, with becoming more and more efficient and effective as a regulator. So I just wanted that to be maybe rephrased so that we can understand the differences between the two. Thank you.
Thank you very much, Mr. Mkhize. Ms. Makota and your team, may you come in, please, and share the questions. Thank you.
Chairperson, I will allow Mr. Godora. I see his hand is up.
Thank you, Ms. Makota. On the first question, Chair, on the earnings before interest and tax, we chose this as the profit measure, Chair, to make sure that there's no double counting. If you recall, Chair, we had initially wanted to use the gross margin, and then would make adjustments for things like distribution tariffs or any other infrastructure that is included in these gross margins. We expected that if we take gross margins, we'll be able to make the adjustments on our own. But we have failed to get reliable sources of data to be able to adequately address this issue, Chair. So to eliminate double counting, we have chosen to use earnings before interest and tax. It's a figure that already excludes the trading costs of these companies that we are using. It excludes any tariff charges. So it's really the figure just before the tax kicks in there. And this is the reason why we have brought it on, is to address comments, especially from stakeholders, that if you use gross margins, you are in fact double counting. And we have heeded that call, Chair, by using this EBITDA. And the advantage of this methodology that we're using is that it starts with the cost, and the cost is a pass-through from the upstream. So for instance, if the gas trader imports gas, it's importing it at a landed cost. That is the starting point of the maximum price. Then we add a margin on top of this cost price. So in the event that there are some outliers in a particular year, at that instance where we are approving maximum prices, we have to check if the criteria that is stated in the methodology is met by each of the proxies. If it is met, the percentage will be added to the cost of gas. But Chair, this is a highly unlikely event, and before we bring back the submission to the energy regulator, we will try and do some robustness checks to make sure that we have a mechanism that will kick in the event that such a black swan or an anomaly type of event occurs, so that we address these issues. Chair, we take the point as an enhancement as well, and we will try and make sure before we bring back the report, it is covered in the RFD. Chair, there's also an issue on the price adjustments and price review. The way this pricing framework is meant to work, Chair, is that we expect the licensee to give us whatever formula or cost formula they have for their upstream form of gas. So if the upstream does not change, maybe or it changes on a quarterly basis, we expect that company, when it applies, to show us how this price will be changing. So what is added on top of that cost is the percentage that we would have approved in this call as the PGS, because it's a cost plus, but we expect that the cost should be passed through. So in any instance where the cost, for instance, if the cost in January is 1 and it moves to 2, maybe in May, we expect the cost to change like that. But what we are approving, or what we are independently checking, is the percentage to add on top of the cost, and our percentage will remain the same. So if your percentage is meant to be 30% and the cost changes, we expect you to add that 30% on top of your cost. And this addresses now the issue of, will you need to have a clawback or like a clearing account where you get any top up, because you are simply moving your cost as it is changing, but keeping the percentage we have approved constant. We'll try also to enhance and illustrate, Chair, so that it becomes absolutely clear what we mean when we say we will only add a percentage on top. And Chair, I think we should appreciate that these are enhancements, and in as much as we have addressed some of them in the RFDs, we'll try to bring them out and try to make sure we address most of the comments that we have been given today. I'm not sure if I have answered all the questions, Chair, but I thought I could come in and try and address these ones. Thank you, Chair.
Okay. All right, thank you very much. Ms. Makota, is there anything that may not have been covered in the response provided so far?
Chairperson, I think Mr. Godora has covered everything, unless if there are follow-up or additional questions.
Okay, I think on the issue of the price review, remember, because of the methodology that is proposed, one would expect that any change will be a change that is triggered by change in cost, number one. So he mentioned that. And then the other change could be a change relating to the way that the benchmarking on the margin, the trading margin, if you are using the proxies. So if there is a change now in the margin, it might necessitate an adjustment. And now you need also the rationality assessment of such adjustment, because it's an adjustment that is based also on the benchmarking, the weighted average or the average of the proxies that are used. So it will be largely influenced by those two factors. And Mr. Mkhize's question is also about those aspects, just to be clear and in the document, that how often will such price adjustments be done, to the extent that they will be affected by those two factors. It's something that you need to just address. Mr. Mkhize, are you happy with the responses, especially also the one regarding the robustness? I mean, the robustness issue is you've indicated that it must be clarified in the methodology and also in the reasons for decision.
Yeah,
are you happy, Mr. Mkhize?
Chairperson, I'm happy with the responses, noting that they're then going to enhance the document accordingly, as well as also when one looks at the time period set for the adjustment of the price, then it also must take into consideration then our turnaround times in terms of adjusting, putting it into effect. So, but the team has given me comfort by stating that they are going to enhance the document based on these inputs. Thank you.
All right. Thank you very much, Mr. Mkhize. And I think that part will also address also the concerns around ensuring that this very same methodology must be one that will also facilitate investment as one of our of the objectives and also the functions of the energy regulator, and also promote competition, facilitate entry, but also ensuring that the gas prices are affordable. So it is to strike that balance. And it is important that in the methodology or in the reasons for decision, that aspect be addressed as to how this approach that is proposed will ensure that such balance is created, and also just bring in the guidance of the Constitutional Court in coming up with this methodology. With that, members, I would like then to, with the changes and the guidance in terms of those areas of emphasis, including those that were discussed earlier in the closed session on the workshop, I would like to take members then to the recommendations. Ms. Makota, if you can help me with the page here, because the recommendations are on page 9, starting from page 9, the overstamped pages. The Piped Gas Subcommittee is requesting that this proposed methodology be approved by the energy regulator, or this is the recommendation. It is recommended that the Piped Gas Subcommittee recommends to the energy regulator to approve the methodology used to approve maximum prices for gas in South Africa, and that methodology is attached here as Annexure A. That's number 1. The second decision that is requested is that the Piped Gas Subcommittee recommends to the energy regulator to approve the reasons for decision subject to the changes and the proposals made by the members regarding the methodology to approve maximum prices of gas. And thirdly, the committee is requesting the energy regulator to note the stakeholder comments on the phase 2 of the methodology, and that is attached as Annexure C. Also, the Piped Gas Subcommittee requests the energy regulator to note the deliberations at the public hearings held by NERSA on this methodology, just for information and completeness. And then lastly, the energy regulator is requested to note the report on finding an appropriate benchmarking method for maximum piped gas attached as Annexure C. Members, are you happy to then to approve all of those recommendations, about 5 recommendations? By show of hands, members, if you are happy to approve those. Thank you, Mr. Bukula. Thank you, Mr. Mkhize. Thank you, Ms. Mpungose. I also approve. Advocate Sithole?
Chair, I do. I'm just struggling to raise my hand. I do support. Thank you.
All right. Thank you very much. All right, members, I'll step off this agenda item, and I'm hoping that at least we'll proceed efficiently looking at the number of the items that we have in the agenda. Moving straight on to item number 7, ROMCO multi-year tariff application for loop line 2 transmission tariff. Please introduce and locate this particular tariff, because we've got 3 tariffs in one ROMCO pipeline. So try to locate this one, and the methodologies are very different, and the volumes attached to each of these portions of the pipeline.
Thank you, Chairperson. I will ask Ms. Kunjulwas Genu to introduce the submission. He will also be supported by Mr. Njesul.
Thank you, Chairperson, and good morning. I would like to introduce this application. This is a ROMCO multi-year tariff application for the period 1 January 2023 to 31st December 2025. This tariff arises as a result of the current tariff that is coming to an end at the end of December 2022. ROMCO is applying for a maximum tariff in respect of volumes that are between 153 million gigajoules and 177 million gigajoules transported from Mozambique to South Africa under the GTA3 tariff agreement. The application was submitted on the 30th of September 2022. We have assessed and engaged with ROMCO in terms of additional information during this period when we were assessing the information. So the baseline application, the baseline tariff will apply to Sasol Gas and the second shipper. There's a second shipper that is also, under the tariff, they specify how the tariff is calculated, how is it going to be charged to all the shippers, because the volumes are transported from MSP to Secunda, and there are volumes that will be transported from Resina Casio to Secunda. So those tariffs are calculated as indicated under the tariff application, under the tariff application section of this submission. We've analyzed and we've calculated. They are using the DCF model levelized approach. NESA used the DCF model rate of return as indicated in our tariff guidelines. We've analyzed the REP, the net working capital, the expenses, the work, the tax, volumes, the tariff, and then we've done the calculation in terms of the NESA calculation compared to ROMCO calculation as indicated in table 10 of the discussion document. Yes, Chairperson, all the explanations of how we've analyzed this application are outlined in the report. I would like to also upfront to correct a mistake or an error in paragraph 2.1.1 of the request, where we refer to Sasol Gas instead of a ROMCO application. So we are requesting the PGS to note this application and to approve the publication of the discussion document of the loop line 2 transmission application for the period 1 January 2023 to 31st December 2025. I would also like to invite my colleagues who have contributed to this application to add on where I have left some of the issues. Thank you, Chairperson.
Thank you. I think you've covered what we need to hear for the introduction of the submission. They may come in at the time when members are asking questions. And please do take the submissions as read. And I think you have covered that. May I then open up the submission? And this is just a discussion document. It is supposed to go out to stakeholders for comment purposes on this tariff. Members, if you have any questions, input on this discussion document, so that those are issues that can be taken into account during the consultation period. Any input, members, by show of hands? Right. If there are no input from the members, I would like then to take members straight to the recommendations, taking into account the fact that this document will still come back here after the thorough assessment has been done and input from stakeholders has been incorporated. Then I'm going straight to the recommendations on page 14. It is recommended that the Pipe Gas Subcommittee to note the discussion document on the Republic of Mozambique Pipeline Investments Company, Pty Ltd, which is ROMCO, its application for the Loop Line 2 transmission tariff for the period starting from January 2023 until December 2025. And that is attached as Annexure A. And secondly, the PGS subcommittee is requested to approve the publication of the discussion document on the ROMCO's application for the transmission tariff for public comment with confidential information withheld as indicated in Annexure A. These are the two decisions that are requested today, members. Mr. Mkhize, you are approving? Thank you, Mr. Mkhize. Are members happy to support?
I approve, Chair, but I just wanted to get clarity on the issue of the methodology itself, that as contained in the agreement, that it will run in perpetuity, or there will be at some point a review of the whole methodology concerning the ROMCO pipeline.
Okay, on this, thank you very much, Mr. Mkhize. On this one is as I indicated, there are three tariffs in this one ROMCO pipeline. And for this specific one, it's an additional investment, like an incremental capacity or incremental investment. So it's a short pipeline, 2.7 kilometers long pipeline. And the methodology used for this specific one is not the one on the main pipeline. This one, it is a discounted cash flow. So they're trying to recover their investment by using this methodology. So then now they're asking for a longer period. Now it was a 3-year period then. Now they're coming for the second time on this new pipeline, and they're asking for that discounted cash flow be the methodology up until December 2025. It's very different from the MSP, from that base pipeline, 865 long pipeline. So it's different.
I understand. Sorry, the Chair, I understand the difference. Only thing I just wanted to get is if there's anything that pertains to that issue of the MSP in its entirety. Okay. Just for information, if there is anything, yeah, or if there haven't been any updates, I'm still fine with it.
Okay, maybe they can come back. Yes, Mr. Mkhize, maybe when they come back on this matter for the final decision, they can also, maybe just for information, brief members about the status of the tariff for the main pipeline, as well as maybe the tariff for the compressor station located in Komati-Port, and then this third one. Maybe they can do that in the final submission. Thank you very much, Mr. Mkhize. I noted your hand, Mr. Pukula. Thank you very much for supporting the recommendations. Thank you, Mr. Mkhize. Thank you, Advocate Sithole. I also support the recommendations. And thank you, Ms. Bongose. Thank you, members. The item 7 is noted and also approved the discussion document. We move on, members, to item number 8, which is the ROMCO metering audits and inspection report for the period 2022 to 2023 financial year. I think it's 2021, so just check the period there. Please take the matter as read, highlight the findings of the audits and why we conduct audits, the legal mandate for the audits. In that order, please. Thank you.
Thanks, Chair. Mr. Thabang Sekgopolo will take us through the report, Chair. Thanks.
Thank you, Chairperson. The report is of the metering audit and inspection for the period of 2022-2023 financial year in the Mozambique, on the Mozambican side of the border. And then from the 8th to the 9th and the 13th to the 15th of September 2022, NESA, together with its Mozambican counterpart, INP, conducted metering audit and inspection on the ROMCO pipeline in Mozambique. The following facilities were audited. It was the high pressure customer meter station at Electricidade de Mozambique, EDM, Scomvaniga Energy in Chokwe, as well as Sasol's central processing facility in Temane. The objective of metering audits and inspection on the RAMCO pipeline is to ensure compliance to license conditions, as well as to ascertain whether the current metering system utilized by RAMCO provide accurate gas data. During the metering audits and inspection at the EDM Governor Energy HPCMS, a total of 6 non-compliance findings were made and were due to the license failure to submit some of the requested information and documents, lack of maintenance on the equipment due to incomplete calibration of certificates, and then failure to zero-check the newly installed turbine meter, and the absence of service tags on the meters, as well as the uninsulated impasse line in that metering system. Technician as well as management also had insufficient knowledge of the metering system. And lastly, the EDM Governor Energy HPCMS gas specification were not corresponding to the one at the CPF in Temane. In its response to the mentioned findings, INP sent a letter of non-compliance finding to EDM and requested it to respond with action plans on rectifying those non-compliance findings. With regards to the CPF in Temane, part of the audits and inspection was to follow up on the findings made in 2018-2019 financial year. It should be noted that the licensee failed to rectify all these findings in 2019-20 financial year, and no audits were conducted to follow up on the progress made by the licensee in 2020, 2021, and 2021, 2022, and this was due to the COVID and the insurgency in the country, in Mozambique. Therefore, during the 2022-2023 metering audits, it was discovered that the licensee have now closed or rectified 15 of the 18 instances of non-compliance that are listed in Annex 1 attached to the report here. And then the 3 outstanding instances of non-compliance which are related to the misalignment of the uncertainty of differential pressure, and temperature measurement in the licensee's calibration procedure to that one in the gas sales agreement, were also now included to the newly identified non-compliance during the audit of the 2022-2023. And then
take the matter as read, please.
Okay. INP also sent a letter to the licensee requesting it to respond with the action plan on rectifying the non-compliance findings. We therefore request the PGS members to know the report on the audit and inspection in Mozambique side of the border.
Thank you very much for the introduction of the submission. Members, the submission is here for noting, and I would like members to engage with it if there are any questions of clarity or maybe some guidance. Over to you, members, by show of hands if there are any. Starting with Advocate Sithole, followed by Mr. Mkhize. You may start, ma'am.
Chair, one from my side, which is advice or enhancements of our processes, is that in the letters of non-compliance, I hope we have given the licensee the time within which they must comply with, or rather rectify the non-compliance that we have picked up. So I just wanted to emphasize that because I did not hear this from the presenter nor have seen it in the submission. Thank you, Chairperson.
Thank you, Advocate Sithole. Mr. Mkhize.
Thank you, Chairperson, and thanks to the presenter. Apologies for the background noise of plane overhead. I just want to maybe get clarity where the non-compliance is on the Mozambican side. What is expected of us? Because I'm still of the view that we should raise a concern still and require if there is persistent non-compliance and not turn a blind eye. but I just want to get from the team as to what happened. I'm looking, for example, in paragraph 7.1.5 of the submission. That's all. Thank you.
Thank you very much. Mr. Milatu, please respond. And if you need any assistance in terms of the scope of our operation license, you may indicate so, but also if there is an understanding with regard to issues of jurisdiction when it comes to non-compliance issues, and also take into account that they also impact on the tariff that the South Africans need to pay. And I think we had also senior counsel's opinion on the issue of transmission tariff. So take it on those two parts or angles so that you can be able to clarify the question from Mr. Mkhize. Thank you.
Okay, thank you, Chair. So the first question from Advocate Stolle regarding enhancement of processes on the letter of non-compliance. Actually, it relates to Mr. Mkhize's question. So on this one, Chair, the audits were held on the Mozambican side of the border, where in terms of the gas trade agreement, there should be two audits held, one in South Africa, one in Mozambique. And in terms of the agreement, the hosting country is the one that conducts audits, and the other country participates as visitors. So in terms of the letter of non-compliance is going to be issued by the INP in Mozambique to the licensee. And it's only when we conduct audits on the South African side of the border around January, where there are issues of non-compliance, it is then that NERSA can issue the letter of non-compliance. So in terms of issues of jurisdiction, Chair, hence I'm using here the gas trade agreement that says when you conduct these inspections, you participate as observers. But because now we've got, in terms of the agreement between the government of South Africa and Mozambique, our participation there, it means that if we've got any views regarding issues that become part of the audits, we communicate that through the hosting government. So our participation in Mozambique will be through the INP. So whatever issues that is there will be through the INP. Yeah, I hope I've answered that, Chair. Thank you.
Thank you. I think you've answered. It's because of the legal mechanism that we have in terms of that gas trade agreement signed in 2001 and Article 615 of it, and it calls for a cooperative approach, and so that we can harmonize our approaches. And also that is limited by the fact that our jurisdiction for licensing of operation, it kicks in only from Rassano Garcia, covering Komati Port up to Secunda. So that's what it covers. Thank you. I think there are hands. I'm not sure if there is a follow-up questions, starting with Mr. Mkhize, followed by Advocate Sithole.
No, Chair, I'm covered from my side, except to say what is our responsibility, just to be very clear. Yes, if there isn't any compliance, then where do we come in? Or we just there to observe? That is all. Even if certain things have gone wrong, we'll still just be observing. Or because if there are certain inputs in terms of what must be required of the licensee, like I was hearing that Advocate Stolle was saying, if in the letter going to the licensee should also kind of clarify the time period within which the corrective action is expected to be effected. Thank you.
Thank you. Advocate Stolle.
Thank you, ma'am. Mine just points of clarity as well, based on the response given by Mr. Milato. The first one is that does INP share their correspondence on non-compliance to the licensee with us as NESA? And secondly, what happens if the non-compliance is such that it proceeds to have an impact on the South African side, on which side we are required to then audit? How are the such issues of non-compliance that emanates from the Mozambican side, but they have an impact or they proceed into the South African side? I just want to get clarity on how we deal with those. Thank you, Chair.
Thank you very much. I think maybe we may need to be assisted here. If there are, I think there's Mr. Chokwe here and supported by Mr. Mashian. This is the issue that we've dealt with before, and it's on the issue of cooperation, because we're dealing with two jurisdictions. Even if there is an issue of non-compliance, yes, from the NERSA side, because it will have an impact, we want that non-compliance to be rectified and enforcement action be taken. However, it will not be South Africans that go to another country doing it on their own. Therefore, we depend on our counterpart in Mozambique to carry out the issue of compliance for us through that cooperative mechanism. So because we would not have jurisdiction to enforce that in Mozambique. I would like maybe the legal advisors to just come in and clarify on that aspect. I'm sorry, Mr. Milato, if you will come in later on, but I think this is properly clarified as well in the gas trade agreement of 2001 signed by the two ministers, where it calls for regulatory bodies that are in these two countries to deal with matters of regulation in their respective countries with regards to ROMCO pipeline. So it means our jurisdiction and the scope of our jurisdiction will only be to an extent of our license granted to ROMCO, and as indicated, our license granted to ROMCO, the jurisdiction kicks in from Rassano Garcia up to Secunda. So it means we only license 300 and what, I don't know, 300 whatever kilometers, and the pipeline is 865 long. So the 515 a long pipeline is on the Mozambican side. So we will need the Mozambicans to assist us on that. So Mr. Chokwe, can you assist here? How we should how NERSA should take issues of non-compliance, given the cooperative mechanism that is in the legal system that is administered by NERSA.
Madam Maseti, good morning, and good morning to members and colleagues. I don't want to guess, Chairperson. I'm just coming from a principal point of view to say, indeed, if there's some kilometers that are actually happening on the other side, there has to be a better cooperation at sometimes even at an international level, where actually we can have a feel of those. But you have actually answered it to say we really don't have powers to actually do some enforcements on the other side. But my colleagues, I think Mr. Mashiani and Mr. Murati, who are relatively closer to these issues, maybe they can talk better than me. But from the principal point of view, the legal principle is that indeed those are you have to have negotiations between the two countries at the relevant, maybe the units to actually enter into that country and do that type of a job. Thanks.
Thank you, Mr. Chokwe. Any additions from LAS?
Thank you, Chair, and thank you, members. Chair, I think you have summed it well, and Mr. Mr. Chokwe, also enhancing on the response that you have provided. Yes, it's mainly based on the cooperation between the two regulators, and with the view and the expectations that each body will execute its functions in the interest of the industry. Thank you, Chair.
Thank you very much. Advocate Sithole?
Chair, I think the team must come in the next meeting with a proper response, because I'm not really getting a proper response. Because my question is, what happens when a non-compliance issue started on the Mozambican side and it flows through into the South African side? So they are referring to the cooperation agreement. I'm not sure what provision is there in relation to such an issue. And I was expecting a response relating to that issue. But if they cannot provide it now, can they please provide it in the next meeting so that we get clarity on how these non-compliance issues are dealt with, especially those that starts from one country and they continue to the other country. I understand the fact that each host country would have to do what's on its part of the country and we'll do what is on our side. But there is a middle issue where an issue starts in one country and it progresses to the other. So if they can provide this in a clarified manner in the next meeting, I'll appreciate it. Thank you.
Thank you very much, Advocate Sithole. All right, members, I would like to take you to the recommendations. The recommendations are on page, Mr. Melato, can you please also just direct me to the relevant page for the recommendations? I think they're on page 19 of the overstamped, the green overstamped pages. And the pipe gas subcommittee is requested to note first the report of the metering audit and inspections conducted on the ROMCO pipeline from 8 to 9, as well as on the 13th to the 15th of September in Mozambique. Also to note that INP has sent a metering audit and inspection letter to EDM and requested it to respond with action plans on the remedial of the findings made at Kuvaninga Energy on that customer meter station. And then thirdly, the subcommittee is requested to note that INP will also send metering audit and inspection letter to SEPI and requesting it to respond with action plans on the remedial of the findings made at the CPF in Temane. Members, with those three, are you happy to support? And also maybe to add the point made by Mr. Advocate Sithole, that the team LAS working with the GAR team to provide analysis on the cooperation relating to the enforcement of non-compliance that occurs in these two countries. That is the fourth recommendation. Members, by show of hands, if you're in support of those 4 recommendations. Thank you, Mr. Pukula. Thank you, Mr. Mkhize. Thank you, Ms. Mpungose. Thank you, Advocate Sithole. And I also support. Members, we move on to the next item, which is item number 9, is the GTA 1 tariff for the period July 2022 until September 2022. Please take the matter as read. It's a straightforward submission. I'm giving you 2 minutes to introduce the submission. Thank you.
Thank you, Chair. Just one point of correction. 2.2.1. It's written quarter Q2. It should be Q3. Thanks, Chair. This is a normal quarterly report that we do every quarter to assess the GTA 1 tariff in line with the pipe with the pipeline agreement between South Africa and ROMCO, by ROMCO between the two governments, South Africa and Mozambique. And this report is specifically for Q3. And during this period, ROMCO's tariff was compliant. And also, within this report, we do forecast for the following quarter, where the driver in this is the PPI, where this is in number 8, and we'd like PGS to note the report as per section 17.1. Thank you, Chair, and also to note the Annexure A within the report as well. Thanks, Chair.
Thank you very much, members. This is the adjustment of the tariff for the main pipeline using the prescribed formula that is stipulated in the regulatory agreement. And the tariff is adjusted based on the PPI. And for the quarter, it is indicated how much the tariff is sitting at. It has increased. Members, any questions on this tariff? If none, members, I would like then to take you straight to the recommendations. And the recommendations are that the PGS is requested to note the ROMCO tariff in terms of the gas trading agreement. And that tariff is now sitting at 18.74 per gigajoule. And that is for the period July 2022 to 30 September 2022, and that is quarter 4. And that is the tariff, members, that is adjusted in terms of the PPI. By show of hands, members, if you are happy to note the tariff as indicated. Thank you, Mr. Pukula. Thank you, Mr. Mkize. Thank you, Ms. Mpungose, and thank you, Advocate Zitole. I also support. Thank you, members. We now move on to item number 10 of the agenda, the report on monitoring of ROMCO's compliance with the tariff for GTA 1, GTA 2, and GTA 3 for the period that ended 30 June 2022. Please take the matter as read and then indicate whether there was compliance in terms of those 3 tariffs.
Thank you, Chairperson. This is the report that monitors ROMCO's implementation of the previous financial year tariff. With regard to the GTA 1 tariff, there is compliance there. The summary is provided in Table 3 of the submission. And then with regard to the GTA 2 tariff, the summary of the tariff that was implemented in the previous financial year is provided in Table 6. Chairperson, on the calculation of the tariff itself, we had to do engagement with ROMCO as there were some slight differences between how we calculated and how ROMCO is calculating. But we believe that there is compliance as provided for on Table 6. With regard to ROMCO GTA 3 tariff, Chairperson, we have been reported by ROMCO that they did not apply this tariff as there were no volume nomination that were provided for, or volumes that were nominated for the GTA 3 tariff. As a result, from our side, Chairperson, we believe therefore that there is follow-up work that needs to be done, because we need to understand what is the volume nomination principle that they use and the reasons behind them not nominating the volumes for GTA 3. We did get a preliminary response from ROMCO that Kwande was not able to provide or to transport the volumes as they did not implement their contract. They only started implementing from the 1st of July. But we do believe that it's not only Kwande that were contracted for the GTA 3 volume, also Sasol Gas was supposed to be transported volumes under GTA 3. And therefore, we need to do follow-up work on this, and a separate report will come to the PGS. We ask the committee to note the report. Thank you, Chair.
Thank you, Ms. Magoda. Members, any questions on the on this report, especially maybe arising from GTA 3? But I think the main issues that ought to have been covered on the non-compliance or compliance have been touched on by Ms. Magoda in her introduction. By show of hands, members, if you have any questions. If no questions, members, then I would like to take you straight to the recommendations that are on page they're on page 12, and it is requested of the PGS to note the report on the monitoring of ROMCO's compliance with the tariffs approved by the energy regulator to be charged for the GTA1 main pipeline, for GTA2 compressor station, and GTA3, which is loop line 2 located in Mozambique, and that is for the period the 1st July 2021 until June 2022. By show of hands, members, if you are in support. Thank you, Mr. Mkhize. Thank you, Mr. Bukula. I also support. Thank you, Ms. Mpongose. And thank you, Advocate Sithole. Thank you, members. We are now on item number 11 of the agenda. And again, it is a compliance report. And this time is focusing on Novo Energy's compliance with the approved maximum price of gas. Please take the matter as read.
Ms. Mhlongo will do the presentation, Chairperson.
Thank you, Chairperson. Before the members is a report on the monitoring of Novo Energy's compliance with the approved maximum price of gas for the period 1 July 2021 to 30 June 2022. The report is for noting, Chairperson. To conduct this analysis, Novo Energy was requested to provide NERSA with information, facts, and evidence that demonstrates their compliance with the approved maximum price of 249.44 gigajoules for the period 1 July 2021 to 30 March 2022, as well as the maximum price of 268.21 gigajoules for the period 1 April 2022 to 30 June 2022, in line with the Section 2021 1P of the Gas Act. Chairperson, the analysis of the information provided shows that Novo Energy complied with both Section 21 1P of the Gas Act by charging its customers an actual price that is below its approved maximum price for the period under review. And the Chair, in terms of Section 22 of the Gas Act, Novo also complied with this provision by not unduly discriminating between its customers when charging prices for the period July 2021 to June 2022. Chairperson, it is therefore requested that PGS members note that Novo Energy has complied with both Section 2021 1P of the Gas Act as well as Section 22 of the Gas Act for the maximum price monitoring period between 1 July 2021 to 30 June 2022. And Chairperson, lastly, just one correction under recommendation. The monitoring period is for a period 1 July 2021 to 30 June 2022. Thank you, Chair.
Thank you, Ms. Mhlongo. Members, again, this is a compliance report. I would like to hear if members, they have any questions of clarity on this compliance or any guidance going forward. Mr. Mkhize? Is it approval, Mr. Mkhize?
Thanks, Chair, and thanks to Madam Mhlongo for the presentation. I support the approval. I just need clarity on 6.1, the table 1, the dates. If you can just give some clarity. I'm not so sure because there's the other dates until 31st March, and then the other one, 1 May 2021 to 30 April 2022. Is it June? Or I just want to get clarity there, please.
Thank you, Mr. Mkhize. Mr. Bukula?
Thank you, Chair. My just quick question is on page 8 on that table 5. The number 8 there on that table, GDID. I mean, their volumes are the highest, but they are not having the lowest price, and yet the others. In this case, is it really a question of the negotiations or what could really cause that? I didn't find it in the explanation, in the submission. Thank you, Chair.
Thank you, Mr. Pugula. Advocate Sithole?
Chairperson, just for my education, I just want to find out if we only request the information from the licensee, or do we also go to an extent of verifying what the licensee has given us with the licensee's customers or not? I just want to get that clarity. Thank you.
Thank you, Ms. Advocate Sithole. Ms. Makota, please lead with the responses, and then Ms. Mhlongo will also come in to add.
Chairperson, I will start with the period. The period should start from June to July. So if there is any differences, it could be an error from our side, and we do apologize for that. Now, regarding the price that is reflected there on page 8.
Sorry, Ms. Makota. Those timelines might not be necessarily incorrect. Reason being that the methodology that is still in place, we started implementing it as of April of 2021. The deadline set by the energy regulator for all licensees was that licensees must apply using the new methodology, and the deadline for them to apply and get prices in terms of the new methodology was 31st March 2021. Now, if you look at these licensees, there is an issue of the financial year end by the licensees. So for this specific licensee, it did not have a new price come 31st March 2021. And therefore, for the period April up to 30th, it is April up to 30th or so, it then had to continue with the price of the previous methodology until NERSA approved a new price based on the new methodology. So that's why you will have two periods. One, looking at compliance with the previous price, and two, looking at compliance in terms of the price determined in terms of the new methodology. So that is the clarification. And I'm not sure if this is incorrect. Ms. Mhlongo, if you can confirm.
So you are indeed correct. The two different maximum price were due to the timing of the decision.
Thank you. That is the issue here, to clarify Mr. Mkiza's question. Mr. Mkiza, you have a follow-up question?
Yeah, I think that kind of information is also important just to clarify. I think as an enhancement, it should be included as an enhancement, so the reader is clear with what transpired, even for those that were not part of that process. Thank you.
Yes, thank you very much, Ms. Mhlongo. Please clarify those two periods as we have explained. All right, let's then go to the clarification on the prices there. The question raised by Mr. Bukula.
Chairperson, on the particular price that that Mr. Bukula is looking at, I was checking the customer names there. But if you look at paragraph 7.19, it indicates the prices and the different differentiating features that are implemented by Novo to customers. Also, if you look at paragraph 7.20, I do not want to mention by names because sometimes customers do ask for confidentiality on these things. But there are different differentiating features that are implemented there, such that you may find that at times, even though the customer is consuming a little bit higher than the other customers, they are given certain discounts based on the particular differentiating features. But what we'll do is we will check the particular customer and verify whether it does fall within those categories. I will also ask Ms. Mhlongo to come in to provide further information.
Ms. Mhlongo, please answer this question directly so that we don't approve something that is not factual. So we need the specific response with regards to this specific customer, and distinguishing features will not apply here. It will be the objective differences as stipulated in section 22. So the distinguishing features will be the second leg that requires the energy regulator's approval first before it can be applied. So the objective differences are the ones that must apply. Can you clarify, Ms. Mhlongo?
Thank you, Chairperson. Chair, I might require Nkosi if he can also assist with the distinguishing factors with this particular customer. I'm still trying to find out what was the main distinguishing feature for this particular customer, Chairperson.
Objective difference. We
The
don't have
objective
distinction
difference.
feature. Okay.
Yes, Chairperson.
Thank you, Chairperson. We will have to verify. I think Mr. Pikula was asking about GDID. We'll have to verify. But in the past, Chairperson, Novo has been applying the objective features, Chairperson, in terms of contract length and the distance that is taken to service that the client. So, but we'll have to verify it correctly, Chairperson.
Okay, thank you. If you can verify that, and there are only 4 or 5 of them, is the transmission difference, which is the first objective difference, and the second one is the duration of contract, the interruptible supply, the quantities of volumes. So we need to just get clarity here in terms of those, which one was applicable, which is accountable or attributable to this difference that we see here. Which one is applicable? All right, let's move on to the other questions that were asked by members. By Advocate Sithole. Ms. Makota, please, you have to answer that one.
Yes, thank you, Chairperson. Chairperson, the information that we used for this report is invoices for customers and also the pricing schedule, and that information is provided by the licensee. We didn't get to ask specific customers the information. We took the information from the licensees, and that is the invoices and the customer schedules.
Okay, thank you very much. I think maybe the guidance there from Mr. Tolo, which is proper, is that we do not rely only on the information provided by the licensee. NERSA must verify that information independently by also getting it from the customer, just to be certain about the information itself, which is proper. Mr. Pukula, are you happy with the fact that the difference that has been identified in respect of those 2 customers, just for comparison purpose, that the facts attributable to that difference will then be reported back in the next meeting of the PGS?
Thank you, Chair. I'm fine with that.
Thank
Chair,
you very
if
much.
I may, whilst I still have the floor, I may
Yes.
have a different submission. I didn't have 7.20 as Ms. Makota was reading, but I also recognize or realize that the numbering in my pack may be a bit wrong, like motivation is number 7. So if they can just check the numbering just for tidying up the report.
Yes.
But I
Sure.
may have a different one from what the rest of the members have.
All right.
Thank you, Chairperson.
Thank you, Mr. Pukula. I note that, and if Ms. Makota, you can please rectify that so that the report that is finally filed and for the record by RSU is the report that entails the correct numbering, and so for ease of reference. All right, members, I would like to then take you to the recommendations, and the recommendations are on page they're on page 14. The pipe gas subcommittee is requested to note that Novo complied with section 21(1)(p) in terms of the prices that it charged to its customers, of which prices are below the approved maximum price for the period July 2020 to 30 June 2021. And then the second one is for the pipe gas subcommittee to note that Novo complied with section 22 of the Gas Act by not unduly discriminating between customers when charging its prices for 2021 to July 2021 to July 2022. Could have been 30 June 2022. On this one is subject to the verification of the reason for the price difference in respect of the customer identified on table 5 or number 8 on the relevant table that was discussed, and that will be reported back in the next PGS meeting. And then also members must note the 2 periods that are reported here, and the fact that clarification will be provided for enhancement with regards to the 2 periods and the prices that were indicated. Members, by show of hands, if you are in support of the noting decisions that are requested. Thank you, Mr. Pukula. Thank you, Mr. Mkhize. Thank you, Advocate Stole. Thank you, Ms. Mpongose. I also note the decisions. Item number 12 is the report.
Chairperson,
yes,
sorry,
Mr. Mkhize.
Just for clarity, my understanding with regard to table 5 is why the price is the same instead of being different because of maybe the volumes involved. So it's not that it's a lower price, it's the same price, which will make it comply in terms of not discriminating even despite having those volumes. Just want to for the team to understand in terms of the mandate.
Yes, thank you, Mr. Mkhize. So they will check the applicability of those objective differences if they were properly applied with regards to those prices, even if they're the same. Yes, Mr. Mkhize, and whether then the Novo applied the objective differences appropriately. Thank you, Mr. Mkhize. If you can also capture that, Mr. Mabunda. Item number 12 is the report on the monitoring of Columbus stainless steels compliance with the approved maximum price. Please take the matter as read. I'm giving you 2 minutes to introduce this matter and highlight any issues around Section 21 1P and Section 22.
Thank you, Chairperson. This is a report, a monitoring report from Columbus Stainless Steel for the period 1 January 2022 to 31st December 2021. Columbus, ONESA approved a multi-year maximum price of 146 for the period November 2020 to 30 October 2022. Columbus is not a trader per se, but they are using their transmission pipeline to supply their sister company, Samanco. So we have checked Section 21 that they have charged below the maximum price that was approved, and also checked Section 22 because they only have one customer. So they have complied with both Section 21 and Section 22 of the Gas Act. So we are requesting the members to note the report. Thank you, Chairperson.
Thank you, Mr. Kenu. Members, the report is here for noting. Any questions, members? Questions of clarity? If none, members, I would like to then take you straight to the recommendations that are on page 8. It is recommended that the Pipe Gas Subcommittee note that Columbus Stainless Steel Pty Ltd complied with Section 21 1P of the Gas Act, as it charged its customers actual prices that are below the approved maximum price of 146 per gigajoule. And then also the Pipe Gas Subcommittee is requested to note that Columbus complied with Section 22 of the Gas Act, as it did not discriminate and it has actually one customer. Members, happy to note those 2 decisions by show of hands. Thank you, Mr. Mkhize, Advocate Stole, Mr. Pukula, Ms. Mpungose. I also note. We also move on, members, to the next compliance assessment. And this time it's an assessment of VGN, Virtual Gas Network, of its application of the maximum price for the period 1st July 2021 to 30 June 2022. Please take the matter as read.
Thank you, Chairperson. This is a report on the monitoring of virtual gas networks compliance with the approved maximum price for the period 1 July 2021 to 30 June 2022 in line with Section 21(1)(p) of the Gas Act. Chairperson, on the 30th of September 2021, the energy regulator approved VGN's maximum price of 295.25 per gigajoule, and this is the price that is currently charged by the licensee. Due to the timing, Chairperson, of the energy regulator's decision of 2021 on VGN's maximum price, two maximum prices were applicable to monitor compliance for the period under review, Chairperson. The previously approved maximum price is applicable from 1 July 2021 to 31 October 2021, and the current approved maximum price of 298.25 is applicable from 1 November 2021 to 30 June 2022. A point of correction, Chairperson, on the table numbering, there is some misalignment. We will fix that, and I will refer to page numbers instead of table numbers to limit confusion. Tables in page 6 to 8 show that VGN complied with Section 21(1)(p) and the energy regulator's decision by charging actual prices that are below the approved maximum price. And then the second part of the report, Chairperson, looks into the VGN's compliance with Section 22 of the Gas Act. Section 22 allows for price differentiation based on factors that are justifiable and identifiable. VGN applied the following differences. The first one was the deliveries per day, which show an indication of the volumes consumed per day. They then look at the length of contract, the distance from the mother station, and then lastly, the capital costs used to set up the supply requirements at the customer side. The combination of these features, Chairperson, informs the actual prices that are charged by VGN, and they have been consistently applying these features and have been approved by the energy regulator. The analysis of the information, Chairperson, submitted by VGN, which is reflected in the table in page 11, shows that VGN complied with Section 22 of the Gas Act when charging actual prices for its customers. Therefore, Chairperson, we recommend the PGS to note that VGN complied with Section 21(1)(p) by charging below its approved maximum price in the period under review, and that they complied with Section 22 by not unduly discriminating when charging actual prices to its customers. Thank you, Chairperson.
Thank you very much. Members, this is the compliance report for VGN. Any questions, guidance, input from the members? By show of hands, members, if you have. If members then are happy with the analysis and the clarification provided by Ms. Nkosing-Phile, I would like to take members to the recommendations that are on page, trying to get the page number. It's on page 15. They start on page 15. The Pipe Gas Subcommittee is requested to note that VGN complied with Section 21(1)(p) of the Gas Act as it charged prices, actual prices that are below the maximum for the period July 2021 to June 2022. And secondly, the PGS is requested to note that VGN has complied with Section 22 of the Gas Act as it did not unduly discriminate between its customers when it charged prices over the same period. By show of hands, members, if you are in support of those two decisions. Thank you, Mr. Mkhize. Thank you, Advocate Stolle. Thank you, Mr. Bukula. Thank you, Ms. Mpungose. And I also supported the two decisions that are requested. We now move on to item number 14 of the agenda, which is also a report monitoring the extent of compliance by Sasol Gas with the approved tariffs for the period July 2021 until June 2022. Please take the matter as read and highlight the key issues pertaining to compliance. Ms. Makota, may you please introduce this matter?
Chairperson, this is the report on the implementation of Sasol Gas tariff. Chair, on 24th of February 2021, NERSA approved the tariff to be implemented by Sasol Gas on its transmission activities. And the tariff is for the 3 zones, Gauteng, Mpumalanga, and KZN. Now, this report is monitoring the implementation of that NERSA decision. And our monitoring analysis reveals that Sasol Gas has charged a tariff that is equal to the one that was approved by NERSA, and therefore it is compliant. And secondly, with regard to the compliance with Section 22 of the Gas Act, we believe there is compliance there, as Sasol Gas did not unduly discriminate between its customers. The same tariff was charged to all its customers in the different 3 zones. We are asking that the committee note the report. Thank you, Chair.
Thank you, Ms. Magoda. Members, here's the report for Sasol in terms of its compliance with the tariff that was approved by the regulator. Any questions of clarity, members, on the analysis? By show of hands, if there are any. Right, if none, members, I would like to then take members to the recommendations that are summarized on page 12 of this submission, requesting the subcommittee to note that Sasol Gas complied with Section 4H of the Gas Act for charging of the tariffs that are equal in respect and in line with the decision made by the energy regulator for the period July 2021 to June 2022. Secondly, the subcommittee is requested to note that Sasol Gas complied also with Section 22 of the Gas Act, as it did not unduly discriminate between its customers when it charged the tariffs. Thirdly, the subcommittee is requested to note that Sasol Gas complied with the energy regulator's instruction to pass through a ROMCO tariff that is a proportion of each GTA, being the gas transportation agreements, and expressed as a percentage of the total volume transported in terms of each respective gas transportation agreement. Those are the 3 decisions requested from the subcommittee. By show of hands, members, if you are in support of the 3 decisions. Thank you, Mr. Pukula. Thank you, Mr. Mkize. Thank you, Ms. Mbongose. Thank you, Advocate Sitole. I also support. Thank you, members. We are now moving on to item number 15. Item number 15, again, it is still the assessment of the extent of compliance, this time by Evras, for the maximum price that was approved by the energy regulator. Please take the matter as read.
Thank you, Chair. This is an assessment of compliance of Evras for the previous financial period, in line with Section 21(1)(p) and Section 22. With regards with Section 21(1)(p), Evras complied with the maximum price, as they charge prices that were below the maximum price. And with regards to Section 21(p), given their discriminatory was based on volumes, contracted volumes. However, the volumes were not taken up as contracted by their customers due to issues from the customers themselves. Hence, the volumes are lower than expected. However, they did comply with the overall Section 22. I would like to recommend that the subcommittee notes that Evras has complied with Section 21(1)(p) as they charge prices that were below the maximum prices, and also to note that they also complied with Section 22 of the Gas Act during this period. Thanks, Chair.
Thank you very much, Mr. Njezul. Members, the report for the extent of compliance by EVRAS is before the committee for noting. Do members have any questions of clarity in terms of this report? By show of hands, members, if you have any questions of clarity or any further guidance. Thank you, Mr. Mkhize, you may go ahead.
I'm just thanks to the presenters, Chairperson. I just now I'm raising this is seemingly the last of the compliance reports that we're dealing with here. I just urge the team to say, go look into the regulatory framework in terms of what action the sufficiency or adequacy of the provisions in terms of them being able to be decisive in taking action where there are cases of non-compliance. If there are any areas that need to be improved there, because this happens, say, once a year, and then it could be a case where maybe a damage has already been done to a customer in one way or another, and therefore swift, I would say not a swift remedy or reparation in that regard would be in order. So just look at how the provisions are and see if there are any areas of improvement in doing this. So this is not just an exercise in futility, if I can put it like that. But I'm supportive. I'm just putting forth this general comment, as I said earlier on, noting that this is the last of such reports. Thank you.
Thank you, Mr. Mkhize, and hoping that the team, you must take note of that, and it's not necessarily a recommendation for this specific a submission in terms of the assessment confined to EVRAS, but it is for all assessment of compliance in respect of the licensees, just to look into certain improvements and also improve on your independent verification of information, and thirdly, looking into enforcement of non-compliance and the adequacy of the remedies that must be implemented. So it's those three things that then I'm combining even with the ones mentioned by Advocate Sithole, and it's applicable to all. If you can note that and be recorded as well. Members, in terms of the recommendations are that the pipe gas subcommittee is requested to note that EVRAS complied with Section 21(1)(p) of the Gas Act in terms of complying with the maximum price that was approved as it charged lower prices to its customers. The second one is for the subcommittee to note that EVRAS complied also with Section 22 in respect of undue discrimination, as it did not unduly discriminate between its customers when it charged prices over the period 1st July 2021 until June 2022. By show of hands, members, if you are in support of that, of the recommendations. Thank you, Mr. Mkhize. Thank you, Mr. Pukula. Thank you, Advocate Sithole, and thank you, Ms. Mbongose. And I support members. We're moving on to item number 16. And item number 16 is the report on the developments in the new gas sources in South Africa, as well as in the neighboring countries, which will have impact into the South African market. Again, please take the report as read and highlight the key issues contained in this report. Mr. Mtian.
Yeah, thank you, Chair. Mr. Mtian is not in today. I'll take the report. Yeah, Chair, on this report, we'll take it as read, and I think 3 or 4 most important highlights here. Firstly is on Total Energies gas discoveries in the Brulpadda and the Leibert Block 11B, 12B in the Outeniqua Basin, the southern coast of South Africa. So, Chair, on this one, the Brulpadda has got estimated 1.3 trillion cubic feet of natural gas as well as 80 million barrels of gas condensate, whereas the Leipert is estimated at 2.1 trillion cubic feet of gas, as well as 112 million barrels of condensate. So the most important highlight, Chair, in this report is that Total Energy and its partners have launched its production application with PASA for Block 11B, 12B on 5 September 2022, just before the deadline. So Total Energy's plans to fast-track the production of labor discovery by linking it via a pipeline to an existing offshore production platform that is run by PetroSA. And Chair, phase one of the BERT project aims to develop around 3 gas production wells that will be connected to the FA platform that is operated by PetroSA. So it is estimated, Chairperson, that the project that will cost an estimated 45 billion rands to develop the first gas around 2027 could sustain approximately 560 million cubic feet of gas per day. And on this one, Chair, the estimation also is that excess gas could be used to supply ESCOM power plants in the Gorikwa area for its gas to power project. In addition, Chair, along the Orange Basin offshore Namibia, we've got Atlantic Oil and Gas, which announced that the Kazania 1 well, which they intended drilling, or they started drilling on 10 October 2022, it reached a depth target of 2,360 meters, but it showed no signs, Chair, of commercial hydrocarbons. So the well will be plugged and abandoned. So the company expressed its disappointment with the outcome, but indicated that well logging was ongoing and a detailed analysis of the results, which will inform its future plans, will be undertaken. Okay. And meanwhile, the company has submitted with PASA its production right application on 15 November for Block 2B for more exploration wells, Chair. And again, at home, we've got Renegen, Chair. We've seen that the LNG project belonging to Renegen in Virginia Free State is now complete, and the company reached major milestone in September 2022, which saw its plant producing commercial LNG for the first time in South Africa. And it said that this milestone represent Renegen's transition from explorer to producer, Chair, and the emergence of Virginia as the first South African commercial LNG plant. So the company has reported that its on-site storage tanks and the virtual pipelines tankers are at full capacity. So there are 2 major companies there, Chair, Ceramic Industries as well as Consol, that have been decommissioned, and the other one still to be decommissioned for taking gas, Chair. So our response here as the energy regulator, our action plan is to make sure that since there's development of industry around the area, so meaning that Renegen trading as Tetra 4 needs to amend its trading license application, Chair, to include these new customers along that area. And lastly, Chair, in Mozambique, we've seen the first LNG project coming online and adding Mozambique as in the list of LNG producers in the world. So we've reported last time, Chair, that the first shipment of LNG from the Italian ENI, the 7 billion Coral floating LNG project, left the field on 13 November to Europe. So it is hoped, Chair, that these cargoes, LNG cargoes from Mozambique, will help alleviate a tight global LNG market and gas shortages in Europe caused by the conflict, Chair, between Russia and Lithuania. And also, Chair, in Mozambique, we might see the return of Total Energies after the company declared a force majeure on its 20 billion LNG project due to the violent insurgency in the Cabo Delgado area, Chair. And this could see also the return of ExxonMobil, which the INP indicated that it will resume its final investment decision on the LNG project in the Rovuma Basin, Chair. And yeah, Chair, I think those were the most important highlights in the report, Chair. Thank you.
Thank you, Mr. Milato. Members, this is just the report in terms of the developments. Any guidance from the members or any questions of clarity on what has been or what is contained in this report? By show of hands, members, if any. If none, members, I would like then to take you to the recommendations on page. Mr. Mkhize, is it a question? Mr. Mkhize, you may go ahead.
Yeah, thank you. Sorry, my hand has been slow in coming, and apologies for that. I would just like to when I look at institutions, bodies, persons consulted, I think it will also help to use this as an opportunity to improve our liaison with other authorities. I'm looking that the presentation of this a report of this nature should definitely feature collaboration with PASA as an upstream regulator or authority in this regard. So I think it should come in here, as well as other authorities, just that I've got them in my mind now. And then it's also important when we're looking at these developments, somehow maybe also in conjunction with PAS and others, to have some kind of a roadmap as to the monetization of that gas. I'm happy with the investment that we are talking about of about 45 billion that with the first gas coming in 2027, because then you got a view in terms of how this is coming up, but also to look at the issues of also the risks and the management of such risk. For example, if I look at it, except for the as a result of the Russia Ukraine conflict, would still have the environmental side of things being stepped against gas. We know what Europe then declared as gas being a transitional fuel and being sustainable, so to say. But still, it's an area that I think needs close monitoring and should be noted as such, because even if we are developments, the issue of the risk that then lies ahead, it's a challenge. And linked to that is I see a risk around the issues of intra-African trade, where yes, we get the gas, but the gas is shipped out. We remain not necessarily using that gas, but still using more polluting fossil fuels. So I think it's important to just note that. But the report from my side is highly appreciated, and I find it to be very informative. Thank you.
Thank you, Mr. Mkize. Advocate Stole.
Chairperson, I think Mr. Mkize covered me in a way in regard to the need to have a collaboration with PASA. So I was just going to say, Chairperson, maybe we need to formalize that collaboration such that we do get a feedback or regular reports from PASA with regard to the application that Mr. Mulatu indicated that Total Energies have already submitted an application for production rights to PASA because we don't regulate the upstream part of it. And my understanding is that we regulate the midstream. So we do need to know what happens or what are they moving towards in relation to that particular application. So it was just to reiterate the need to really formalize our collaboration with PASA. Probably we can do it that in a letter that will be written to PASA to say that we are aware of this application, and we'll appreciate it if they can give us regular reports on this particular application and its outcome. Thanks, Chairperson.
Thank you, Advocate Stole. Mr. Pukula.
Thank you, Chair. I support the report, and I have no issues around the packaging of it, and I can see at the end we have the references of where we have taken it to. We just probably don't put them in here, but that's not the NESA style of reporting, but maybe we can improve it so that we are never accused of plagiarism. And yeah, I think the writer has taken up some very flowery or is a very expressive writer. I mean, 8.15 talks about Tanzania's first female president. You know, I'm not against it, but I think we also have to find a way of just making it kind of focus on what we do. But I'm happy with the report, Chairperson.
Thank you, Mr. Pukula. All right, Mr. Mulatu, I think most of the questions from the members are really for improvements, and it's continuous improvements. So if you can take all of those improvements at heart with regards to the formalization of the collaborations with the PASA, we should coordinate, we should align, and we should also get some updates and verify certain things with PASA. So if that can be given effect to in terms of formalizing it. And I think it takes care of both comments and also maybe just look into the risk, but the risks are quite wide. It could well be the risk Mr. Mkize spoke about arising from the Russia-Ukraine geopolitical issues and the way that gas is treated now as a transition fuel, but also maybe look at the fact that now Europe is going to these other countries, including Africa, for importation of gas from Qatar, from Africa here in Mozambique, and I'm sure maybe in Tanzania, in order to be able to fill the supply tightness in their countries. So look at that and the possibility of access to the gas in Mozambique. And I think also be very mindful of the packaging, acknowledge sources of information very well in the report, but also be mindful of the language that is used and sort of being conclusive and too confident, and maybe in the way that we write certain things, we need to just be very careful in the way that we express certain views and opinions based on the information. I'd like to go straight to the recommendations. Ms. Advocate Stole?
Chairperson, just as a by the way, I think it's also important for us to also provide comments to the regional gas master plan, because some of the information in this report can be factored into that particular regional Southern African regional gas master plan. Thank you.
Thank you very much. And I think there is work that is being done in the division with regards to specific comments on that particular project. Thank you very much for highlighting it here as well. Thank you. Members, I would like to go straight to the recommendations on page 16. It is recommended that the Pipe Gas Subcommittee notes the report on the developments in new gas sources in South Africa and the neighboring countries, and this report covers the month of August until November 2022. And we also note the improvements highlighted by the members as I have summarized them. By show of hands, members. Thank you, Mr. Mkhize. Thank you, Advocate Stole, Mr. Bugula, as well as Ms. Mpongose. Thank you very much, members. We move on to item number 17, and I would like to finish the meeting at 12 o'clock. May you please take the matter as read and highlight the key issues arising from the second quarter report on compliance with the license conditions.
Thank you, Chair. Chair, during the second quarter compliance inspection, 20 facilities, all belonging to Sasol Gas, were inspected, as indicated in Table 1 on page 6 of the report. And then there were 3 instances of non-compliance discovered at 12 facilities. And they were due to 5 facilities decommissioned without submitting a decommissioning plan for approval by NERSA, an incorrect instrument installation at 1 facility, and a lack of equipment maintenance at 3 facilities, as well as the risk of fire due to the overgrown vegetation at 3 customer meter stations. Chair, the licensee managed to rectify 2 instances of non-compliance, which are the maintenance of equipment and correct installation of the instrument, as well as the cleaning of the dried vegetation from the CMSs. With regard to the 5 decommissioned facilities without first submitting the plans for approval to NERSA, Sasol Gas has, on the 30th of November 2022, responded with the action plan on how they're going to remedy the non-compliance. We therefore recommend to the PGS members to note the second quarter compliance report with license condition, and then note the issuing of a letter of non-compliance to Sasol Gas by the Pipe Gas FTRM, and of which this instance of non-compliance Sasol did respond to it on the 30th of November 2022. Thank you, Chair.
Thank you very much, members. This is the report regarding the second quarter on the compliance inspections that were conducted. Any questions, members, on the findings of that compliance? If there's anything arising from the report. By show of hands, members. If none, members, hoping that I'm not leaving you behind. All right, if none, members, I would like to take you straight to the recommendations that are contained on page, that's on page 18. It is recommended that the subcommittee notes the second quarter report on compliance with license conditions on the Sasol Gas's operation of the gas distribution and transmission pipelines in the following areas, which is the first area is Pretoria West, second one is Babelehi, third is Roslyn area, third is Springs Pretoria Babelehi. It's the spelling of Babelehi there, a transmission pipeline in Pretoria and Rich Flay area, and then the fifth one is Krugersdorp area. And the last one, and the last noting that is requested is the issuing of the letter of non-compliance on the findings contained in this report that will be issued by the FTRM in line with the standing instructions approved by the energy regulator. Members, by show of hands, if you are in support of these recommendations. Thank you, Mr. Pukula. Thank you, Mr. Mkhize, Advocate Stole. Thank you, Ms. Mpongose. I also support. Members, we are now on item number 18. And item number 18 is the monitoring of the volumes coming from Mozambique delivered by Sasol Gas as an importer of that gas from Mozambique. And these are the volumes for October 2022. Please take the matter as read.
Chairperson, the purpose of this submission is to request the Pipe Gas Subcommittee to note Sasol Gas volume wells report for the month of October. During the month of October, Sasol Gas imported approximately 30 million gigajoules of natural gas to South Africa. Expected is 13.4 million gigajoules per month. The percentage balance for October 2022 was negative 1,81, which is within the acceptable limit of the agreed international benchmark of 1. It is recommended that Pipe Gas Subcommittee should note Social Gas volume balance report for the month of October. I thank you, Chair.
Thank you very much, members. All the information pertaining to the monitoring of these volumes is contained in this report, and the issues of concern and the variance is also analyzed. Do members have any questions of clarity on this report? By show of hands, members. If none, members, I would like then to take you. Mr. Mkhize, please go ahead. Okay.
Sorry, I was voting. Sorry.
Sorry, Mr. Mkhize, I'm sorry if I was slow. I didn't want to leave you behind. I'm on the recommendations that are on paragraph. The numbering is incorrect there. We've got 18 and 19.1 and then 18 again, but the page number for the recommendations is page 13. It is recommended of the Pipe Gas Subcommittee to note the information depicted on table 2, of which information contains the monthly gas volume balance report for October 2022. It also contains the amount of gas delivered to South Africa during October 2022. And thirdly, it contains the volume variance percentage as highlighted in table 2, and which is within the international benchmark of 1%. Members, by show of hands, if you're in support of this these recommendations. Thank you, Mr. Pukula. Thank you, Ms. Mpungose. Thank you, Advocate Stole, and Mr. Mkhize. You're also happy to support. Thank you, Mr. Mkhize. Thank you, members. We have come to an end of the deliberations on the matters that are open to the members of the public, and I would like to thank the members of the public that followed these proceedings and the deliberations that took place today. And